All right, good morning, everyone. This is Brian. We have Forex Show here with us as well, and we're here for Forex Live. This is our Tuesday morning installment for January 14th, 9 a.m. Eastern, 8 Central. And what we will be doing today is going through the daily regimen for live trading that Forex Show's laid out for us, and we'll use that in conjunction with our daily report to find and identify some trades. So this is your opportunity to practice along with us and see exactly how we enter trades utilizing Forex Show's method. Now, before we get started, we do have to let you know that unique experience and past performances do not guarantee future results. Trading is speculative, it involves risk, and we should only be using risk capital. Honestly, that's kind of a given. But I guess it has to be said. Somewhere along the line, something happened apparently that folks didn't think that there was any risk in trading. So anyway, there's the legalese for you. I'll give you just a second to read through that, and then we can get started with our trading day. All right, there you go. Long enough, right? Let's go ahead and get that out of here and get started with it. So what are we doing today? Well, we're going to be walking through the daily trading regimen. So what that is, let's just pull one up so you guys can all see it. In your members area, if you go over to Forex Live and you go to the schedule tab, for example, the tab that you signed into this webinar with, you can actually click and load up a PDF or download a PDF of the daily trading regimen. I encourage you to do that. Follow along with us. We utilize this page every time that we're going to apply our methodology here. This keeps us with a consistent approach to the marketplace. This ensures that every time we place trades, we're doing it in a consistent manner. Now, does that mean that we're going to win every trade? No, absolutely not. But it gives us a consistent approach, and consistency is key when it comes to trading. We have to have a consistent approach if we want to have consistent results. If we're just, ad hoc, winging it as we see things occurring, then we're not really applying consistency to the marketplace, and we never know what we're doing right or what we're doing wrong. So it's important for us to follow this method, and that's what we'll be doing today. We'll be going through the Euro USD, the Pound USD, and the US Yen, and placing some trades. We'll spend a lot of time here on the Euro USD the first time, because we'll be talking quite a bit about what we're doing, why we're doing it. We'll go a little bit faster here, and then we'll go full speed here and show you how we apply this method. It can really be done in just a few minutes each day. It doesn't have to be time consuming. So if you have other trading styles that you're trading, you have other methods that you're using, you can still go in, you can place your trades and do your analysis in the morning place, and then go get on with whatever it is you do. Maybe you have a primary income. Maybe you do other things, and you need to go spend time with your family, whatever it might be. You can do that by using this approach and spending a little bit of time up front, investing a little bit of time up front to find your trades and plan your trades. So with that said, let's go ahead and get into it. So I have a sheet of paper in front of me. I'm a tactile guy. Even though I'm born in the digital world, I'm still pretty tactile when it comes to that stuff. So I print these out, and for me, it serves as my not only my consistent approach and my checklist for trading, it's also my trading log for my trading journal. So it kind of serves two methods for me. So you'll hear me scribbling in the background as we're going through these currency pairs. So let's kick it off. I had a quick scalp off of this Euro USD. And we'll talk about why I traded what I traded in just a second. But let's go ahead and get on with the, we can talk about this trade first and then go back to our method. So using the consistent approach, we have a couple of setups. And what I had seen here was when I signed in this morning and looked at what news was occurring, looked at all the criteria, which we'll go through in just a moment, I saw an opportunity when this had pulled back to what had been setting up as a high throughout Asia. It wasn't the Asia high. The Asia high was actually here at the London Open. But we saw this level had been very well respected in Asia and broke through and had only been retested a couple of times. So when price pulled back to this area right here, I went ahead and took a buy on this trade. So now the software protected me. It pulled off my profit at 6.5 pips. Let's see if I can move that up. Yeah, so it pulled off my profit at 6.5 pips, locked in my profit once it hit my take profit 1 level, and ensured that I had a trade that took me positive for 8.5 pips, even though I was setting up for other things, getting ready for this call, and talking on Skype to Forex Joe. I didn't have to be here actively managing the trade, and we'll talk about this in just the way our software works and what it does for us. But that was a trade that we had on when we first entered class, so I just wanted to let you know what that was and why I did it. It was a retest of this what's now a support level that had existed or been formed during the Asian session. So what I'll have on our screen today is I'll be using the chart trader software, the pending order software. So there's 2 versions of that, the templates when you load up your 21st Century Forex trading modules. And so when you sign in, you'll see one called Pending Order Pro and one called FTT Pending Order Pro. Pending Order Pro is just a bare bones, has your red and green lines that we move to enter the buys and sells, but it doesn't have your session indicators or your thermal grids. So I'm using FTT Pending Order Pro, which has all of that information there for us. It has our thermal grids as well as the session indicators, which I find to be very helpful in my trading. So with that said, let's get started. Current price for the Euro USD. So just filling out our form here. Very first column, Euro USD. Current price is 1.3666. 1.3666. Now, first question, channel information. What do we need to fill out here? Well, for our channel information, we're going to pop over to our daily report. So from your members area, go to Forex Alerts, down to daily report, and select the one on top, and it'll pull up your most current daily report. This one came out last night, so it came out Monday night, U.S. time. So Monday night is for the following trading session beginning Tuesday in Asia, running through all of Tuesday up until the market closed today. So we're using the Monday night report, and this is telling us that on our daily channel, which is where we always start, our daily channel tells us that we have a channel top at 36.79 and a channel bottom at 36.32. Don't really see any, our weekly channel isn't lining up with the daily, so there's nothing to be too concerned about there immediately. We do have below us 33.29, so if this euro did break down and push down to 33.29, this would be a great spot for us to start looking for potential reversals. So just a number for your back pocket, 33.29. If we get to that area, we'll see some chop more than likely. Doesn't mean it will, but more than likely, higher probability of that occurring at that number. All right, support resistance levels. Next thing on our checklist, what are our support and resistance levels? Well, we're trading at 36.66. So what do we have here? Well, we have 36.60, kind of a decision point for us right where we are. If we break below it, 36.54, so a pretty tight channel, down to 36.32. To the upside, we break through this and move up. We've got 36.83, 36.83, and 36.95, 36.95. So that 3,700 area. Next question, are we trending or oscillating for today? So we have to go to our chart to answer this one. What's happening here, trending or oscillating? I think we could all agree that right now we're oscillating a bit. We opened here with Asia, we've moved down, we whipped up, we've moved back down, and we're just about where we started the trading day. So I think we all agree we're oscillating there. Has the channel been broken? Another question for us. Have we broken above 36.79, or have we broken below 36.32? And the answer there is yes, we have broken that channel. On news, I'm guessing this was news. I can't imagine it would whip like that without. We'll know that in just a second. But looks like that channel was broken. We pushed through. We closed above on a 15-minute candle, pushed on through, came back. We retested that area, balanced, and it finally broke through it. And we've seen that channel top be pretty well respected there. So has the channel been broken? Long way of saying yes, the channel has been broken. All right, average daily range. Well, today we've moved 50 pips. This currency pair, typically has been moving a little bit tighter range than that here just to kind of kick off the year. We know that coming into the new year over the last 6 months or so, this currency pair has been in a range of about 70 to 80 pips. Um, Under normal conditions, 2011, 2012, even into the early part of 2013, we would see this pair move into the 100, 100, 110 pip range, but it's been much slower over the past, 6, 8 months. So will it change? I shouldn't say 6 or 8 months, 6 months for sure. Will that change at some point? Yeah, maybe, but right now it's been a much tighter range. So just to be aware of that. Next question, news. What news is coming up? Well, I like to utilize Forex Factory for my news, and here we're able to see what do we have. Well, let's just refresh that. For our news, we're looking here to see if there are any red reports. So what we mean by that is when we pull up our forexfactory.com or FX Street or Bloomberg, any news source that you choose to use, we'll let you know, whether the news is a low-impact news announcement or a high-impact news announcement. And what we're concerned about are the high-impact news announcements. If we have a high-impact news announcement, right now it's 9/11 Eastern Time. If we have a news announcement coming up at 9:30, then maybe it's not a great time to place a new trade. So what we would do is we would plan our trading day around that and say, okay, well, we know we have a red report coming up in 30 minutes, so let's not trade until after that. In our case today, we don't see any new news that's planned for the remainder of the day that's high impact anyway. We have a couple of medium impact news announcements coming up or speeches coming up, but nothing high impact that we should be overly concerned about. Now, of course, there's always going to be unplanned things, blurbs, news sound bites, whatever it might be that could cause a reaction in the marketplace, but nothing immediately that we should be too overly concerned about. So for news, I'm just going to put an N. Nope, no new news coming up. And then the last thing we're going to check for here is the futures market, which I didn't have open for some reason. Let's open that. I like to use finviz.com for this. Finviz, finviz.com/futures. And finviz.com gives us a great heads-up dashboard on what's happening in the futures market. It lets us know, are we leaning to positive futures or a negative futures market? And why do we care? You're saying, Brian, we're trading Forex, I don't care about futures. Well, you should care because this is kind of a bit of a leading indicator for what's occurring with price, at least with price as it relates to the U.S. dollar. And the reason we say that is we like to look at what's the Dow doing, what's crude doing, what are gold and silver doing. Typically, when you see all of these moving in the same direction, so Dow's positive, crude's positive, gold and silver positive, and typically when those are positive, the rest of your futures market's going to be fairly positive as well. So when you see positive there, you'll see a negative in U.S. dollars, and conversely, when you see negatives here, negative performance in these areas, you'll see positive in U.S. dollars. The reason for that, and I know I've said this 1,000 times, but just to repeat for anyone that's brand new, just joining us for the first time, the reason that we do that is because typically, now again, there's nothing that's 100% in trading, but typically when we see this, what we're able to see is when we see money flowing into futures, we're taking new positions, we're pushing up, the Dow's pushing up, crude's getting stronger, gold and silver getting stronger, and usually at that point other indices are getting stronger as well. You'll see money flowing out of the dollar. So we're taking positions from U.S. dollar that we're holding liquid, and we're putting them into these, so that causes the dollar to weaken. If these are weakening, if we're seeing money flowing out of the futures market, it typically is flowing into the dollar. We're cashing out positions here, and we're holding them liquid in U.S. dollars. That's why we look to this to see if there's dollar strength or dollar weakness. Now today, it's a little bit of a mixed bag, and this is a kind of a confusing state for us, right? When we see a mixed bag like this, it makes it tough to know, okay, there's no real clear trend. So that's just more of a cautionary beacon for us to say, hey, maybe we need to be a little bit careful today, keep our stops tighter. There's no, definite trend that's occurring that we can jump in with. So right now I'm just going to put kind of a sideways, I put a little sideways tick to let me know that it's not positive or negative at this point. In fact, they're Dow's up, crude's up, but gold and silver are both down. So a little bit of a mixed bag for where we are. So we'll want to keep an eye on that because that could change as this is all on electronic trading. Becoming more heavy, heavy electronic trading is getting heavier and heavier, but you still do have your live pit traders that come on here in about 15 minutes when CBOT gets fully underway, and we might have a change or at least some level of directionary commitment at that point. But right now, kind of a mixed bag for us here on the futures market. So we've gathered a lot of information. Now we've got our current price, well, or at least where it was current 15 minutes ago. We've got our channel information. We gathered our support resistance levels. We know if we're trending or oscillating. We know if our channel's been broken or not. What our average range versus what our average range. What we know how we know what we've moved today versus what our average range typically is. We know if there's any news coming up that would prevent us from taking a trade right this minute, or maybe we have to delay it by a little bit until the news occurs. And we know what the futures market's like. So even with all that commentary, it only took us 10, 15 minutes to get through all that. So what are we going to do? Where are we going to place some trades? What do we want to look at here for trades? Well, let's go ahead and put some lines on the chart just to get things started. We're going to start here by identifying our channel top and our channel bottom. So we have 3679 is our channel top, which is right about here. 3679, it's right about there actually. And I'm going to change this. I typically keep my lines purple so I don't confuse them with anything else. I used these red lines. Last night we were talking about 3 of 3 channels and we were marking a few of those. But for right now I don't need to have that thick red line. All right, so we have our channel top, and then down here at 3632 we have our channel bottom. So let's just compress that down. Come on, clicker. And we have a channel bottom down here. Now you'll notice that these aren't exactly with thermal grids. One isn't. If I can get that to select. All right. So we have this. We do have thermal grids here as well. We have a thermal grid at 3674 and a thermal grid at 3632. So one's right on with our channel, one's slightly below. Either way, they come from 2 different sources. There's different math that's occurring, but they're usually pretty darn close. So just depends on whether you, if you use thermal grids, you've kind of got this exercise done for you already without having to place new lines. If you're not using the thermal grids, then we do what we're doing right now, which is putting these new lines in the chart. Next up, we have our support resistance level. Well, we have 3660. We know we just talked about that a second ago. And below that, if we break down 3654, which is really close, and then 3632, which coincides with our channel bottom. To the upside, if we break through 3660, we have 3683, which is up here. 3683, which is super, super close. Wouldn't be too concerned with that one. And then after that, we have 3695, which is right here near our thermal grid of 3700. For me personally, and in my trading style, I would probably just err to the upside to 3700. But 3695 is a key level for us as well in today's trading. So here we've got some charts. Now, what else do we want to look at? Well, let's just start here. I showed you earlier a trade I took. I was a little bit above it, but we had pulled back, and I actually took the trade on this after we pulled back here at 3660 something, and I got a few pips out of that. Now here we've pulled back again to 3660, and another opportunity for some pips. But where are we really going to look? I like this trade because typically when we see a key level being set up during Asia and we break beyond that, it's just this is a textbook trade for me. And we'll start seeing it a little bit more often now that the markets are moving. We had a few months back there towards the end of the year where some of these setups weren't even around. But typically, one nice setup that I like to look for is the trade I just showed you earlier. When we see during a high or a low, a support or resistance level being established during Asia, and then we break beyond that during the London session and come back to it. When I say break beyond it by at least 15, 20 pips. And typically during London, if it's broken out of that area and it comes back to retest it during the U.S. session or right before the U.S. session, it's a great spot to look for a quick scalp, whether that's a buy or if it's broken down and coming back to retest it as a sell. So it's just a textbook trade that I really, really like, and we were able to take advantage of that earlier. For right now, what are we going to look at here? Well, we've got a channel kind of setting up here, and we've got a pullback here. Where are we going to look? Well, this 3660 has been pretty well respected for us for the day. So I'm going to go ahead and park another buy down here. So if we do pull back, I'll look to buy it again off of this level. And I'm going to keep my stops, like I said, fairly tight. We don't want to have a huge amount of risk. I like to keep it about 1-to-1, you know, for what my risk is to what my take profit would be, maybe a little less at times. So we'll get that set up here. So what we're going to do is we're going to look to go. I'm going from this entry point of 3660 to our thermal grid of 3674, and then I'll take my set my take profit to just beyond that at our support resistance level that we identified at 3679, which was a channel top actually, right there at 3679. So we'll get that one identified, get that trade on. The other one I'll put on is if we do push up and we continue pushing stronger, as we approach this 3700, whole numbers always hold a lot of significance from what I've seen. We do have a support resistance level here at 3695. But just looking beyond that, we have 3700, which is a whole number. So as I mentioned, for me personally, I'd favor that when I'm looking for a bounce. If we can get to that level, then I would certainly look for it to reverse the first time it got there. Now, does that mean it absolutely will? No, but that's why we use a stop loss, and that's why we keep our stops fairly tight. So if it gets to 3700, I'll look for it to push in, touch us in around that whole number, and then come back down to 3695 for my first take profit, and just see if we can get some profit quickly, and then if we can push beyond that, come down to this next support level down here. So and now that we've got those set, I'll click move to buy and sell, and we're in the marketplace. Now see, all we're really doing here is we're utilizing the principles that Forex Joe teaches us, and applying those in the live market, utilizing the key levels that we're finding. Now I know I talked a lot during this, so it took us 20 minutes roughly to get through this. We'll go a little bit faster on the pound, and then even in kind of full speed on that U.S. yen, so you can see really what's occurring there and how quickly you can do your homework and put these trades on. So there you have it. So we got a couple of trades on here. We'll come back and watch these. Now for me, just so you know, my caveat is if these trades don't hit prior to the close of London, I just shut them down. So if the trades kick in, great. If they don't, that's fine too. I shut them down. I don't leave them out there long term. Once I'm away from the market, I like to not have any trades on to worry about. Now the cool thing is I don't have to be here to manage these trades. Once these trades are set, and we know what our maximum risk is going in. We know our maximum risk is the distance from our entry point to our stop loss. That's our max risk. But I don't have to be here watching it or managing it, because once this trade moves to take profit, the software automatically peels off a third of the trade at take profit 1, and it moves my stop loss to break even +1, protecting the trade, just like we saw earlier from that scalp trade that I took. So we don't have to worry about being here and manually entering manually entering a trade and going into your trade manager to peel off part of that trade and reset your stops and everything. The software does it all for us to ensure that we're protected. So next up, pound USD. What do we have here? Pound USD. Just filling this one out. GBP USD. All right, so we'll go a little bit faster on this one. 64.20 is our current price. Channel information. Survey says we have 62.88 for a bottom, 64.49 for a top. No consistency in these daily numbers on a weekly level or monthly level, so there's no key level right above us or right near us that we'd be too concerned about today. Support resistance, 64.20. We've got 64.26 right here where we're trading currently. If we break below that, 64.14, and then 63.45, big fall that gets through there. To the upside, 64.49, which coincides with our channel top, and then 6,500, big hole number. I like those. Trending or oscillating for the day. What are we seeing here? Looks like we're in a bit of an upward trend, so we're trending up. I think we could all agree on that. Has the channel been broken? Great question. Have we broken above 64.49, or have we broken below 62.80? And the answer there is no. So we are in a bit of a trend, but we've seen it come up and approach this channel top, approached it here and repelled during this London session, shortly after London, pulled to it again at the open of the U.S. session, and now has repelled. So it's knocking on the door, but it doesn't seem to. Nobody wants to open it up. Let them in. Has the so channel broken? No. Average daily range. Well, we have 83 pips that we've moved today, so that's pretty significant. 83 pips. This currency pair has been in an 80 to 100 pip range. Prior to the summertime blues, it was about 110, 115 pip range. But definitely the pound has been a pretty good mover so far this year. News, we know that there's no news coming up. We already answered that question. And the futures market, and won't have had too much change there in the last couple of minutes, but we do want to watch this throughout the day. You got a mixed futures market. So, with that said, we captured a bunch of information. We got our channel information, our support resistance levels. We know what's happening in the marketplace. So now what do we do with it? Well, let's have a look. 64.49, channel top. We know that's been a key area for us. We saw price come right to it in reverse already. I mean, pretty much right to it, by the way, in reverse, right off of that channel top there. And channel bottom 62.80, a long ways down here. Whoa, here we go. 62.80, right down here. There we are. So we got that one on. What else do we have? 64.26, right through here. 64.26, kind of one of our support resistance levels, decision point for us. And then 64.14 right down here. And these are all thermal grids already, by the way. So if you're utilizing Fast Track Trader, it's taking this piece of the puzzle out of it, where we're having to click lines. We've actually already got that visually on our charts in advance. We know where price is going to struggle or bounce around here. And then we've got 6,500 if we get through that. All right. So there we go. 6,500 right there. All right. So what are we going to trade? What are we going to do here? Well, 64.14. So we had actually there's another level right down here that we didn't talk about. Kind of setting up at that 6,400, 63.99. So over the course of Asia and then into shortly after London, we see this. We had a top, so resistance, broke through it, support, pushed back up. Now, here we are kind of trading in another little channel here. The 64.26, resistance, broke it, crashed back down on some sort of news. Now we're back up, resistance, and now we're seeing it come up as potential support, support, now potential resistance right here. We really need to watch and see what happens with this candle before we can enter a trade. If we want to trade off of 62.26, we need to see what happens here. We've got this candle's just about to close. We'll need to wait for the next one as well. But are we going to see it close below, close above? And then the next candle will give us direction. So if this candle closes here, next candle pushes above, then we would look to buy it on a retest of 64.26. But we really need to wait. We need to wait and just see what happens here. So if we're going to trade off of this level, it's really, really close, really tight. So what we can do is we can come down and we can kind of do the same thing we did on that Euro trade. We can pull back and place a trade here at 64.14 for our buy, and then our sell off of the 6,500 level. So, but if you want to be a little bit more aggressive and trade off of this 64.26, what I encourage you to do is wait for this candle to close now. So we have this candle that pushed up right to it. This candle closes above, then we'll buy it on a retest. If this candle pushes red, closes below, then the next candle you'll sell it on a retest if you want to trade off of 65.26. So we're just going to take that out of the picture right now. We're going to pull our buy down here to 64.14. And we're going to look to take profit at these key levels that we're identifying here. Of course, if we do push beyond this, you know, and we can pull all the way up to this whole number here at 6,500, then I'm going to look for a sell off of that. Keep those fairly tight. And there we go. And we move to buy and sell, and voila, we are in the market. So that just took us a couple of minutes. Now you can see if we're not kind of talking through every bit of it, it just takes a couple of minutes to do the analysis and place your trade. Finally, last one here, US yen. Let's do this one more time. We'll go full speed on this one, and then from here I'll turn it over to Forex Joe, and he'll talk to you just a bit about some things he's been seeing in the marketplace. He put out a trade for us last night for the roundtable folks, actually day before yesterday, with a pound yen alert that's pulled over 130 pips so far. But we'll let him talk about that here in just a second. Let's do one more on this, the US yen. US yen, current price, 103.70. All right, back down to the daily report. And we have a channel top at 103.52 and a channel bottom at 102.24. Support resistance levels, we're trading at 103.70, so we have resistance above us at 103.80, support below us 103.48, and then 103.29. If we break through 103.80, we have 104.09, and then way up 105.21. All right. Trending or oscillating for the day. I think we can all agree that we're trending up. So we have an upward trend, a little up arrow there. Channel been broken? Yes. Yes, it has. Have we broken above 103.52 or below 102.24? Answer there is absolutely. We broke through there, and not really looking back just yet. Average daily range. Well, today we've moved 75 pips, and this is another currency that we know typically moves in that 80 plus pip range. Excuse me, just a second. All right, sorry about that. I had to sneeze, and wanted to make sure I didn't do that into the mic. All right, so average daily range, we talked about that. News, we know that there's no news coming up. And then finally the futures market, what's happening over there in the futures realm. Just about 4 minutes into the pit traders on board, so not seeing a lot there. Although, if anything, we might be seeing more starting to sway to the negative side here, but that remains to be seen. If we pull back more here on the Dow, pull back a little bit on crude, gold and silver already down, then we could see some more piling into the U.S. dollar. All right, so what are we going to trade? 103.52 we have right here as a key level for the channel top. 103.80 was our next level up. 104.09. Got a thermal grid up here. 103.80 right through here. 103.48. 103.29. All right. So just takes a second to pop these. If you're using the lines, if you're using the support resistance levels, you can put them on pretty darn quick. Just putting your lines on, or if you're using your thermal grid template, then they're already there for you. The only thing you would have to do if you're using thermal grids, if you don't have a grid in the middle, like let's say here between 103.47 and 104.05, is you may want to compress that channel a bit to see if there's another area to trade from. Right now we're not really seeing it. So again, here we can do the exact same thing, which is load up our buys and our sells. And again, we're not going to press it. We're not going to look to try to break any records. We just want to get into the market at a reasonable level, keep our stop fairly tight, and look to take profit pretty darn quickly as well. And then if we do push to a key level like 104.05, key level, but it's 104, big whole number, 104.5 is just a little bit above that, then if we do push that high, then I would look to sell it off of that and take even though it's counter trend, take some profit the very first time it got there. So let's just go ahead and do that. Get that set. By the way, what I'm doing here, the reason I'm squishing my chart is sometimes you've got areas where your red or green lines are not visible. They've maybe been set way up here or something. If that ever happens, they're just not around, you can look to see where it is by looking here on this grid on the right hand side. Where is my take profit to? And if it's outside of the range that you're seeing, you can just grab your vertical scale and move it down so you can see more real estate here. And then you can drag those lines down to where you want them. And then once they're set, obviously you can move it back if you choose to, and then move to buy and sell, and you have your trades on. So there we go, just that easy. So now these trades are set. We've set bracket orders on the Euro USD, the Pound USD, and on the US Yen. So we got those set. So from here, I'll turn over to Forex Joe, and we'll see what he has to allow for the remainder of the session. So Forex Joe, you with us?
Yeah, good morning, Brian. Good morning, everyone. Hope everyone out there is having a great morning. I'm kind of preparing for the webinar tomorrow night. Hopefully everybody will be there. We got our 2414 review from 2013 and then preview for 2014, and that will be tomorrow night. So I'm kind of putting some information there together. I sent out a update for the roundtable members. I actually stuck in the pound yen last night in the trade alerts. Hopefully everybody got in on that buy. It's 168.91. We're seeing the pound yen now breaking above 170. I was a day early, so actually everybody should have participated in that. And I think we took profit one around 133 pips, and then there was a second trade that is still in play with the roundtable members. So roundtable members are in two trades. Those of you that are getting the trade plan alerts, and I'm going by memory, I think it was 168.91 was the entry last night. And last time I looked, it was right around 170, 25, 30 area. So hopefully everybody set those trades, and that is what you should be doing at the very minimum. If you're wanting to have growth and expedite that growth and trade smarter, not harder, then every time that the reports come out, you need to set all the trades and the trade alerts in a practice regiment demo account. Then you are looking to try to find out when is the best time that you can trade. And there's many areas, and we'll be talking a little bit about this tomorrow night as far as setting your goals. But market timing is very critical to success. rather than relying on gut feel or instinct only, which we try to teach that you have, all gut feel or instinct is you gaining experience, vast experience in these markets by executing trades in live current market conditions. So the successful trader relies on these proven trading techniques to optimize market entry and exits. The key is you can't be in the markets 24/7. So you have to figure out when is the best time that you can participate in the markets and try to be consistent. So we have overseas customers. We have customers in 15 different countries, I think. So if you're overseas and you're from Australia and it's best for you to trade during the Asian market, then that should be your time. Those of you that are trading the London session or the U.S. session, that should be your time. You're looking for that specific time to try to get your niche in the markets. Now, once you're able to develop your skills and enhance your skills and enhance growth, you'll be able to use the trade plans and the swing trades. And what I'm basically going to be doing is pushing the swing trades even more. I took a look at what I did last year with all the swing trades that I sent out to the roundtable members. We made some tremendous pips. We're off to another great start this year. In fact, many of you have been participating. We've talked about the U.S. Canadian getting in and around. We got around $1 that it'd go to 105. When it got around 105, I thought we'd see 110. I thought we'd have until tomorrow night to talk more about that, but we've seen the U.S. Canadian break above 0900 on its way upward. We've also had tremendous success with the U.S. yen. One of the pairs that have been oscillating, and we had a terrific 2013 as far as a trending pair, and we talked about this during the latter part of 2012 all the way into 2013. In the middle of 2013 when we did our two boot camps, was the U.S. yen trending from about 85, 86 area all the way up to where it's currently residing, and it's touched 105 before bouncing back down. So we've had a wonderful trending pair. Then we've had the U.S., a Euro-U.S. dollar, and the Euro-U.S. dollar only moved 1,147 pips in 2013. We had a low of 27.47, a high of 38.94. We talked about this, I can remember going all the way back to March, April, May, June, and then we hit the summertime blues of how this pair was oscillating within a channel. Do you realize that the average for the Euro-U.S. dollar in 2013 was 33.02? Now, why do I bring that number up? Because our huge number of significance that we talk about was 33.29. So the average for a pair for the entire 12 months was 33.02, and a pair had only moved 1,147 pips, and we were within 27 pips of one of our key areas, 33.29, to base that number off of. Now, not only were we near 33.29, but then we were at the psychological number of 3,300. So even though the euro dollar did not make as high a percentage as some of the other pairs that we'll be sharing with you tomorrow, and folks, there's a few pairs that made anywhere from 17 to 21%, and you'll be utterly amazed if you haven't already went through and did the work, is that it's really fantastic that we had a tool, and all of this is documented in the members area. So those of you that go back and review as far as trading oscillators, what it takes to trade range-bound trading, the summertime blues that we talk about that has been extended with the Euro-US dollar, trading that pair in about a 1,000 pip channel compared to you get the US yen that's traded in almost a 1,900 pip channel, and there's one pair out there that traded over 4,000 pips for the year. So once you begin to understand how these markets maneuver and you're able to expand your horizons, and that's what I'm going to be talking about here over the next few weeks, is how to get even more pairs so you can not put too much pressure on yourself, but just kind of do kind of a review and preview of some simple techniques that you should be doing. Some of us do them for a period of time. Then we kind of get off the beaten path. We kind of lose our sense of direction. We kind of let go of the daily techniques that we've been taught, and we don't always follow. So we'll be focusing on that for the rest of this month going into February. Right now, if you take a look at the pound yen is in a great area. I asked a question. If anybody sees that question on the pound yen, I also updated. If you have not yet went to forexjoe.com, please go there and sign up for our tweets and for our Facebook. Whenever I place anything on forexjoe.com, you get a tweet, and then I actually hit a tweet beside the report that I sent out. So make sure that you go to forexjoe.com, sign up, and make sure you're on our Twitter feed for me. It's directly for me. Whenever we put an update there, I hit it, and whenever we update anything on forexjoe.com, you get a Twitter feed or on Facebook. So we're taking a look at some of these pairs. The euro U.S. dollar is looking for a sense of direction. So is the pound dollar. The U.S. yen is trying to recover. We had a little bit of pound weakness and yen strength the last couple of days. We talked about that in the reports. Now we'll see what transpires here. We've got plenty of news events here over the next couple of days and some other news events forthcoming here over the next couple of weeks. Remember that Monday is a holiday. It is Martin Luther King Day. I think it's also a holiday in Australia or somewhere, someplace else it's a holiday. But there's a holiday forthcoming on Monday, so I don't know if we'll do a class on Monday. I need to talk it over with Brian, but we will be back next Tuesday with a class, and I think we have one here again on Thursday morning. So, Brian, I'll turn it back over to you. If anybody has any questions, I'll be more than happy to answer any questions. Other than that, we'll see everybody in the webinar tomorrow night, and there'll be a ton of info that I think you'll love to see, and we'll kind of be cognizant of time, be in the door, out the door in about 35 minutes or so. Over to you, my friend.
All right. Thank you very much, Forex Joe. Well, that's it. We walked through a few trades, showing exactly how we utilize the daily trading regimen and how we apply it under live conditions. So if you have questions about that, type them in. If you don't want to put them in right now, send them over to support. We'll be happy to answer those for you. And as Forex Joe said, we'll be cognizant of your time and go ahead and wrap it up, get out of here, and we'll be back here on Thursday for our next live trading session. Look for a newsletter coming out today. We've got some important updates for you. And then, of course, if you haven't already, register for the 2013 review and 2014 preview. Looking forward to some great information from Forex Joe tomorrow night on that live event. All right, so we'll see you guys soon. Thanks for being here, and have a great trading day.